Welcome. My name is Len Lane, and I am the founder and president of Brokers for Life, Inc., and we are Dominion Lending Centers in Western Canada. The topic of our podcast will be about what we consider to be real-life mortgage solutions. Welcome back. My guest today is Sam Dayal. He is a CPA, which is formerly known as an accountant, I guess. I'm not sure what that change made, but Sam works for us as a commercial underwriter with the DLC Commercial. So Sam, welcome to the show.
Thanks, Len. Thanks for having me on.
You know, it's always interesting, although majority of our business is commercial, we are constantly asked questions about different types of loans. Liquor stores come up quite often. People want to buy a liquor store, or and of course, we get lots of requests about apartment buildings, small commercial. You and I have done several different versions of that over the years. So, really, for the listeners, what's probably the biggest difference between a business loan and a commercial mortgage?
Yeah, so a few key differences between the two. One, a business loan is unsecured lending for a bank, so it's all based on cash flow. Whereas a commercial mortgage is typically backed by security and, generally speaking, a property of some sort. And so a bank or a lender, any type of lender, can take a charge on that property. And so it comes down to, so a commercial loan is based on the income of that property. If it's a piece of land, though, where there is no income, they look at the security value of that property and what's going to be done to it in the future. Now, the other big difference between secured and unsecured lending or a business loan compared to a commercial mortgage is the higher interest rates. So for a business loan, higher rates are, again, quite higher. It's all based on risk tolerance, and risk for a business loan is considerably higher. Again, no security involved. They do more, there's more due diligence involved. They'll look at the owner or the person looking to purchase, their experience in operating in that industry and operating that type of business. They'll look at the not only the cash flow, but also just whether they can operate a business successfully. They'll want a business plan, pro formas, and projections, and see what the team is involved. Also, the amortization is shorter for a business loan. You're maybe maximum 10 years compared to 25 years for a commercial mortgage. And for an apartment building, we can do 50-year amortizations, which I'll talk about later on. But that's kind of the key differences. Also, the costs involved. Both, whether it's a business loan or commercial mortgage, everything is more expensive than a residential loan. The rates are slightly higher. The fees, the banks charge a fee. We as mortgage brokers have to charge a fee on commercial loans because we don't get paid by the banks. You have to have 2 lawyers involved. And so it's just way more costly.
Right. So what actually, we talked a little bit about the different types of property that you see in commercial. I know we've done everything all the way up to a hotel with you at one time.
Yeah.
So what I know it's quite the gamut. And you just mentioned there that raw land is a different category for commercial as well. So what are the, I guess, types of properties that generally fall into that commercial category?
Yeah, so there's a mixed bag of them. And I actually get phone calls pretty much 4 or 5 times a day right now for commercial financing business loan, which is unheard of. When I first started, it was 1 call a month maybe, and now I've been doing this for 15 years here, and so people have gotten to know me, and I guess they trust what I tell them, and so I get a lot of phone calls on all kinds of applications. And so whether you're an investor or a realtor or any other professional in the industry, a mortgage broker, give Len a call or give me a call, and we'll kind of quickly work through the application with you. Usually I can give you an answer within a couple hours. But to answer your question, in types of properties, there's multifamily, which is very popular right now, and I'll talk a bit more about that later. That's apartment buildings, which we do with CMHC or conventional loans or a private loan. Then there's office buildings, strata office units for professionals that want to buy just an office space for themselves or expanding or looking to, an investment property there. Industrial bays, again, very popular right now. Industrial buildings. Industrial bays are, again, for investors or owner-occupied businesses looking for, rather than paying rent, they want to buy a property, have an investment as well. Retail strip malls, we're doing quite a few of those right now. And then, of course, professionals. We have a professionals program with a few banks, and that's for like lawyers, accountants, doctors, banks love doctors and dentists right now. And so we can get them 100% financing. I think, Len, you and I have done an association, actually. We did a union group a while ago. And then the other ones, land development, we see a lot of those. Key for land development is the quick question I ask is whether the person is on a never, never plan, which is just they're holding land and don't know what to do with it, in which case you often end up with a private lender. Otherwise, you have to, if you want to go with a bank, you have to have a plan within a year of what you're going to do with that land and what kind of improvements you're going to make with it. The properties that I don't have a lot of, I get a lot of calls on them, but they're challenging, is farming. And to be honest with you, I'm not a farmer and I don't have experience in that area. So I've only done one farm loan in my time, in my 15 years here. Cannabis, that was very popular, but unfortunately, a lot of cannabis companies just don't make money. And that's been a big challenge. I think there's been some industry consolidation. I have done a couple of dispensaries. I've done those kind of financings, but that was when it first got legalized. And then I've done churches, a couple of church financings.
Those are tough. Those
are very difficult. Again, they're nonprofits, so that's challenging. Hotels and motels. This is an interesting bag. I actually, in my accounting days, I worked for a large publicly traded hotel company, so I know a bit about the industry. We had over 30 hotels across the country. And so I did quite a few hotel deals before COVID. Then, of course, COVID completely wiped out that industry. And now, if you're traveling across Canada, you'll see that hotel rates and, good luck booking a place. It's through the roof. Hotels are doing really well, but banks want to see 2 or 3 years of financials after COVID to see how they're doing. So I'm just doing one right now on hotel financing. But for up to now, the banks have had a challenge with it coming out of COVID and whether this is just a temporary surge or, a long-term industry change.
Yeah, it's interesting because, when we travel lately, it seems like the price of a hotel is double what it was in the past, right?
It's crazy.
Doesn't matter where you go. It's the same all the way across the country, I'm sure. So what's interesting about the marijuana industry, it's legalized, but it really isn't making any money. So I have to assume the only one making money is the government off of it.
They're doing really well there. Cannabis is really interesting. A lot of people invested in it, a lot of just investors, and I think some did well, most didn't. Yeah, I've seen a lot of financials in that space, and where they expect it to be and where they are is two different things. There's a few big industry players that have done well. Yeah, but we get a lot of calls here on it. And cannabis, it's also got a stigma. That's the unfortunate part, even though it's legal. And I'm actually looking at one right now, which is on the island, but it's a Vancouver island, and it's a farmland. And I told the client just yesterday, actually, just don't mention cannabis anywhere because they don't actually do a lot of it on their site, and it's really immaterial the value for it. But to maintain their farm status, they have to do some kind of farming, so they're doing hemp. And I said, let's just not mention it, because you're getting income from all kinds of other sources on this farm, and we'll see what the banks say. Because the minute they read cannabis, they're going to say, we don't like this industry.
Yeah.
It's a reputation risk.
Yeah, I guess. I don't know if that'll change over generations, but I guess.
Yeah, and a lot of it comes from, like the big banks, what I've been told, is they're scared of the Americans because they sit there and say, well, if we lend here, if you're a BMO or TD bank and America finds out you're doing cannabis loans, they no longer allow you to, they're worried that they won't be able to operate in the US.
Oh, right.
And so that's kind of, and then of course, the kind of people that come into the industry, which is not really true at all, but people they still have stigma. It's same with tattoo parlors. Getting a loan on a tattoo shop is very difficult. Hair salons, funny enough, nail salons, they think it's involved in money laundering. I get a lot of phone calls on those properties, like a client has a tattoo business and they want to buy the retail unit. And I'd send it to banks or talk to banks and they come back, it's a tattoo shop. But tattoos are not what they used to be.
No.
But it still has that stigma to it. Nail salons, hair salons. The problem in that business is a lot of people that operate there, they don't like to report the income. And so, unfortunately, if you want a mortgage, and same with pizza shops, right. If you want a mortgage, you got to report it all to the government, your income. And then then we can qualify. And what we need to see is 3 years of financials.
Right. And that makes them hard to be startups for sure, right? That they have no background in that industry, or might have the background in the industry, but never actually ran an actual business with it per se, right?
Correct.
So,
Yeah.
yeah, no, that's interesting. It's I think you and I actually looked at one in Calgary that had both a tattoo shop and a pot store in it. So a few years
Yeah.
ago, right? So yeah,
The
no
perfect
question.
the perfect strip mall for an owner, but you can't get a mortgage on it, is a tattoo shop, a nail salon, hair salon, cannabis shop. They
Yeah,
all the tenants make a lot of money,
yeah,
but the bank won't give you a loan on it.
no. I can see the banks being scared of the U.S. because really it's only in pockets in the U.S. that it's been legalized, right? So it's I know Colorado has made a small fortune off it, almost eliminated all their uh, state debt because of the taxes that they've collected on it, right? But of course, you cross the border out of Colorado, you're illegal with whatever's in your
And I
car,
think the
right? So
rules are, I don't like Washington State is also legal, but I think if we cross the border into, like I'm in Vancouver here,
right,
if we drive across, but I think that's federally regulated. So if we tell them we got marijuana, they'll,
yeah,
we
you
won't
can
be able to
still.
cross. We'll be banned from crossing. But it's legal here in BC and it's legal in Washington State, but you're not allowed to cross that border.
Just that thin line in between there
Yeah.
that they keep wanting to move. So I know we've looked at this quite a few times. Setting up the expectation for clients when they're getting ready to purchase a commercial property. What kind of costs can they look at up front? I know we've talked about appraisals and a few other things over the years, but what is the biggest numbers that they have to be aware of?
Yeah, I like to be really upfront with the clients. I don't want to, I like to be honest. That's my thing. Tell you upfront. I'm not always 100% right, but I'm pretty close to it. But I like to tell you upfront what you're going to see, rather than telling you later on about hitting costs.
Yeah.
Or surprising you later on saying, "Oops, we didn't." I've been doing this long enough that I should know what's going to be involved. I do give you general information. The reason is because our job, Len and I, is to shop the market for you and your behalf and represent you to the market. So I don't know what, TD is going to do or Service Credit Union or something, but I'll give you a range. So on commercial, it's kind of the smaller the loan, the higher the rate and the cost. The bigger the loan, the cheaper the rates and costs. And the reason is because whether I do a loan for our minimum kind of is $1 million, I'll do some loans smaller than that, but I like to keep it $1 million plus. But whether I do a loan for $1 million or $10 million, it's the same amount of work for Len and I. And so that's, why we have to charge the same. And also banks just like bigger numbers, and it's a lot easier for them to deal with bigger loan amounts. So in terms of minimum cost, you're kind of looking at, I would say, 10 grand. And, so an appraisal report for commercial, it's a bit of a sticker shock for people, but, you're looking at 2 grand for a strata unit and up to $10,000 for a proper hotel appraisal.
Right.
And so it's a big range of what it costs. Now, a big difference on commercial is that you as a client, you pay for this report. And so you actually get to keep the report. But Len and I, we do have recommendations on who to kind of use. There are approved lenders or good appraisal firms. And I have a bunch of, considerations. Or if you have somebody in mind yourself, just call me and say, hey, this is who I'm thinking of using. And usually I'll let you know whether it's good or not. Or I might even give the appraiser a call. What banks look for. And then same with other reports, which is an environmental report. And then a building inspection report is not required. An environmental report, sorry, I should back up, is like a phase 1 report. Then there's a phase 2 report and phase 3. Phase 1 is basically what an environmental firm does is they check the library, check the history of the property and how it's been used. Phase 2 is when they cost a lot more. It's about $25,000, $30,000. And they have to go in and do drilling and testing of the soil to see if there's any environmental contamination. Then a phase 3, it's pretty much game over. But, I've had a couple of clients go down that route, which is they come in and actually remediate the soil. And now you're into the hundreds of thousands of dollars.
Right.
But they've had no choice because they want to operate their business there.
Yeah.
So those, and then the other report is like a building inspection report. It's not required, but if you're going to spend $1 million on a property, you might as well, get a report done for a couple of grand, know what you're buying. And then other costs, you're paying for 2 lawyers. You're paying for your lawyer and the bank's lawyer. So that gets, about $5,000. And then fees. Every bank charges a fee. It could be as low as, 0.1% all the way up to 1% of the loan amount. And then also, we as brokers, we don't get paid by the banks. And so we charge a fee, and that can be anywhere from 1 to 2% of the loan amount.
Yeah, and those are the things. The environmentals, I think I've only seen one ever get to even stage 2 gas station, grassland,
Yeah.
right? So, out in the middle of nowhere. So, and they did have a problem. I don't know what they ever did with that one, actually. I think the same guy may still own it at this point. But it's that's the part I think that surprises more people when when they first come to me. I'm always clear about that you can expect to be at least $6,000 to $7,000 easily into it before you ever actually get to a point where you actually want the property, even, right? So it's
Well,
not
that
going to
and
be.
even, people go, can I get a pre-approval? We don't have pre-approvals in commercial. But what I do for clients of Lens is I'll do a quick analysis for you and give you a rough idea of whether you qualify or not. And that's without spending any money. And so I kind of do what's called a free evaluation. And to do that, what I need is, generally speaking, an MLS listing or a realtor's brochure, a property rent roll, and then revenue and expenses. If you're buying just a business, I need the financial statements for the last 2-3 years. I can quickly, with my background, I can kind of really quickly look over financial statements and tell you where the holes are or where we can look at. And it'll just save you time, effort. And then also how Len and I work together a lot is commercial. We care, but we don't really care where the money comes from for the down payment. So on commercial, you need a minimum 25% down. So if you don't have that, we basically can't help you, or we find other solutions. And how Len and I, we've done this a few times. I'll have you call Len up, and you might own your own personal house, or you might have other residential properties where Len and his team will be able to free up some capital for you, and you can use that towards the down payment of a commercial property or a business, and it's great. And we don't need a gifted down letter, so gifted down payment letter, I guess is called that. Yeah. So you can borrow money off friends and family and put that into your holding company or what have you, or lawyer's trust account, and off you go. But now I should say, with anti-money laundering rules that came in and anti-terrorism rules, they do want to see a 60 or 90-day history of the money being in your bank account. This wasn't there before, but that's some of the rule changes that are coming.
And I would assume, just like ours, anything that's offshore money coming in, that's going to want to be documented highly. Correct. From one end to the other as well, right? That's always been an issue for us, but became even more so last October 11th. Exactly. So I know one of the most popular products out there right now has been the CMHC multifamily program. I got a feeling that's been I've seen your posts, and that seems to be coming across your desk on a pretty regular basis, and in a lot of different sizes, for one, right?
Yeah. I can talk for hours on end about this. It is incredibly popular. We've done CMHC since I basically started in this business. So we have a lot of experience in it. And we used to be a direct lender correspondent for CMHC, which means we can take applications directly to them. And to be honest, since they've introduced the MLI program, before then, I only did like 2 or 3 applications because the numbers just didn't make sense. Paying the insurance premium didn't make sense. The longest amortization yet was 40 years. So we'd weigh the cost and benefit. I do this for all applications. I'd weigh the cost and benefit of doing an apartment building on whether it makes sense to go conventional CMHC, and it did not make sense in the past. But now, with the MLI program that was introduced about 3 years ago, it's been a game changer. It's been very, very popular. And so I'll tell you some of the highlights of it. First of all, so for CMHC MLI, you can Google it and you'll find some information there. Or if you want, just send me an email or text. I can send you some documents. The minimum 5 units on a single lot is what qualifies for CMHC MLI. And they don't care where they lend across Canada, because their mandate is 3 social outcomes which you want to achieve. 1 is energy efficiency. 2, and this is for the property. The second one is accessibility. And the third, which is the most popular, is affordability. The first 2, energy efficiency and accessibility, they only make sense on new construction. So they don't make sense on existing buildings, just too expensive to retrofit a building. But affordability works for both new and existing. And the highlight on the program, which you'll see on the brochure and people that you talked to about this program, is up to 95% financing and up to a 50-year amortization, lower insurance premiums, and cheaper rates. And so those are kind of the four highlights of it. The program to qualify for 95% financing works really well in the prairies. It works well in northern BC. I don't do work in Quebec. Apparently, it works well in Quebec. It doesn't work well in Vancouver, where I'm based, and it doesn't work too well in Vancouver Island and Toronto. It doesn't work. And the reason it doesn't work in these cities is because our land costs are too high and rents are too low. It's better than a conventional loan because you get a longer amortization and the rates are cheaper, but you don't get to 95%. But whereas in the prairies, I get there all the time. How they calculate affordable rent is based on the median rental income of the area. And in the prairies, you folks make good money there. So compared to us in Metro Vancouver. And so that's how they calculate it. And so it's, we look at it from both construction and existing buildings. I do a lot of them. I get probably 3 or 4 calls. I actually turn down a lot of applications as well. I shouldn't say turn down. I give people strategies and ideas and they'll call me back, 3 months, 6 months later. I had a call yesterday from a guy that I talked to about 6 months ago, and now he wants to go ahead with a 50-unit building. I had a call with a person this morning. Sometimes I forget when I speak to these people, but I spoke to him about 2 months ago, and he wants to go ahead and build 8 units now in Edmonton. And so they usually take the information I give them, step back for a bit, do some brainstorming, get a team together and call me back after, or they just completely, disappear. So the qualification on it to qualify for this is 2 things we look for. First, I look at the property analysis, what I'll do. So I'll look, again, rent roll, MLS listing, and the revenue expenses for the property. And if it's construction, I want a pro forma construction budget, pro forma rent roll, and I'll do analysis from there and some drawings. To qualify, you got to have a net worth equal to 25% of the loan amount. And so if you're qualifying for a loan of $1 million, or if the property, usually I tell people just simple, back of the paper envelope kind of math. You're buying a property for $2 million. I want to see a net worth equal to 500,000. And that can be in your principal residence. It can be in other rental properties that you own. And how we verify that is we look at the mortgage statement that you have compared to the value of the property. It could be an appraisal, it could be a tax assessment, whatever you like. And then we look at your investment portfolio, which is stocks and bonds. That's valued. And if you have RSPs, we take half that value. If you have Bitcoin or any other kind of crypto, they've started to accept that as well.
Oh, really? Yeah.
Again, we want to see a screenshot or value of it, and they'll discount it to either 25 or 50% of it, so half the value or a quarter. It's very volatile, so they don't know how to do it. And also, it's interesting. I've had a couple of crypto people look at apartment buildings, but they find investing in an apartment building quite boring, so they don't really go ahead. So that's kind of how we look at things there.
They prefer to have shares in something that has fluctuated by almost $20,000 over the last 6 months.
Yeah, they love the wild swings there. This is, buying an apartment building is, it's great passive income. What I say it does is there's some restrictions for CMHC, which people need to know about, is that you got to put the loan, it's closed mortgages, so they're not open mortgages. So you got to lock them up for 5 years, 7 years, 10 years. I have one lender that offers 15-year lock terms. So it's up to a 50-year amortization, but you got locked mortgages. So if you decide in 3 years from now, this is not for me, you got to pay the full remaining interest. So it's not 3 months penalty. It's not interest differential. It's the full 2 years remaining interest. So if Len owns a building and he's decided he wants to sell it to me, and it's year 3, he's got to pay the full 2 years remaining interest. Or what he can do is I can assume the mortgage from him, so the remaining debt on it. But I now have to qualify for CMHC financing. And generally what they look for is I have to be equal to or greater than Len. Otherwise, Len's guarantee stays on the loan. So why would you sell the building to me and keep the guarantee on the loan? Yeah. Anyway, so we run into this quite often. You'll see realtors listings and just scan down for an apartment building and see if it says assumable mortgage or not. I can still run the analysis for you. But oftentimes people don't go for an assumable mortgage.
Yeah, and assumable even in the residential world is a tough thing to do because basically you have to qualify anyway. Okay. So you might as well almost look at a different term altogether, right? So
yeah,
well, that's interesting. So your office is MLI direct to CMHC still?
No, they changed the
Huh?
rules,
They did?
and they changed the rules in September. And so what happened is they said no longer can brokers submit to CMHC directly. We have to go through an approved bank. Again, the list of approved banks is on the CMHC website, and most of the major banks are there. The funny thing is about a lot of the major banks is they won't do CMHC applications because they just don't have the resources for it. And a couple of them have been very honest with me, and they've just said we don't make enough money at it. And so,
Well,
yeah.
and that is what they do, right?
So, but you can go to a bank directly, or happy to work with you, and we know how to put the complete package together. Actually, just got 2 approvals yesterday
Yeah.
on a couple of applications where I submitted through a credit union, and the credit union I did all basically they took our application and said, Sam, what do we do? And I said, well, why don't you just put a cover letter on my stuff and just say I've reviewed everything, and we approved this application. That's what they did, and it got approved in CMHC. It got approved in 2 weeks, which is my last 3 applications. CMHC have been approved in less than 3 weeks. They were out to about 3 months, is how far back behind they were. So hopefully they're doing a lot better now. They've staffed up, they've increased resources there, and they like applications. I'm not bragging a bit, but I guess I will toot my own horn a bit.
Sure.
I kind of know what how to submit to them and how to prepare a proper, complete loan package. And we've only in our office, there's 6 of us. I think we've only had 2 loan rejections. One for sure, and the second one I'm not too sure. But before we submit to CMHC, we take a lot of pride in making sure that your application has a chance of success, because it's not fair to you if I waste 2 months of your time and also 2 months of mine.
Well, and that is one of the beauties of working with you, is that because of your experience, when we send a client to you, or there's, talking about a potential deal, that we know pretty quick, or better yet, know pretty quick whether or not there's actually a deal to be had there, right? So that's definitely one of the beauties of working with you. I can guess, I can get close, but there's always those fine details that you'll pick out that can make the deal go quicker and faster for the client as well, right? So
yeah, and I like to brainstorm ideas and bring it in, and we work with a team.
Yeah, and it works out good. So and I know, like you say, you're a busy guy. So I'm going to thank you for your time.
Thanks, Len. All the best, everyone. Take care.
Thanks for listening today. I hope you found the information that we provided to be useful in your mortgage journey. And remember, you can always find our associates at www.brokersforlife.ca/associates. Have a great day.